I have hit the record button, and I officially welcome you to the Option Trading Made Simple live Q&A call. And Ken's here from the UK. We had a couple of, that reminds me, I had a couple of UK people email me to say they couldn't find the book on the UK, I guess, Amazon website, which it is on there. So I'll have to send out a link to the book, all the different countries like India, UK, and things like that. I'm thinking people are just having a challenge finding it. All right, so now my screen is showing again. Okay, so what we're going to do, I'm going to go over a quick admin notes real quick, the agenda for the call, and then we'll go ahead and get started with the content. For those who are new to webinars, you've never been on a live webinar before, if the top right of your computer screen, it should be like a control panel. It's usually expanded. If not, it's like a little thin vertical bar. That's your control panel where you can raise your hand, ask questions, things like that. Ask me to unmute you if you have mic or speaker and you need to ask a question. If you raise your hand, generally I won't see that. So I always tell people just in the chat panel towards the bottom, just go ahead and type in your question, or or if you need me to unmute you, just let me know through that chat panel. We have a small call tonight, so it should be. Unless you all have a lot of questions, we may have some time at the end for open Q&A, and we can spend some time looking for trades together. So tonight's agenda is that, again, we're going to go through some admin notes. I'm going to go over the basic concepts of the book. And for those who don't know, who just saw a link and registered for a webinar, this webinar is based on a new book I wrote. And I am in the, initial... to celebrate the release of that book, I'm holding, this is probably going to be the last live call I have in a while. I'm celebrating the release of that book. I'm going to walk everybody through pretty much a quick summary of the contents of that book, as well as there's a strategy at the end of the book, and I'm using this call to walk you through that strategy live. And then, right now we have the initial, release price, which it will go up here a tad bit, a few dollars here after tonight's webinar. So what we're going to do is go over the basic concepts of the book, and then I'll walk you through the strategy I actually placed, because I placed a strategy in the book and then I taught you how to do it. So we're going to update that strategy tonight, walk you through it, then give you a quick update on it, and if we have some time, which most likely we will, we'll have open Q&A and we will look for trades together, which in my opinion is the funnest part. This is the part I like doing the most, is walking students through real trades and having them place these trades so that way they can see for themselves either the pros and cons of options. They get real world results and they aren't left sitting on the sidelines wondering anymore. Now before, let's see, I'll go ahead and move forward again with the admin notes here. All of my training, just so you know, I generally attract beginner traders, those who don't know a thing about options or those who have yet to be consistently profitable. If you're an advanced trader, I'm not the guy for you. I'm honored that you would want to learn from me. Every now and then I'll get an advanced trader. They may pick up a thing or two, but and in full disclosure, I always tell them, look, I'm not the guy for you, because I break everything down. I make it really, really simple. I'm for beginners and not really for advanced traders. So I just want to give you that heads up there, just so you don't, kind of set expectations. You don't be disappointed thinking you're going to learn something super advanced. That's just not, my heart is not for that. Even though I could teach it, my heart is for the people who are really struggling financially where I used to be, and they just, they have little to no hope that they can succeed with investing, because they've tried stocks, mutual funds, and things like that with dismal results. And, again, every now and then I'll attract somebody who has a ton of money and they're just looking to kind of increase their wealth. So in my more advanced program, which is called the Success Academy, we have the three major groups I have are retirees looking to earn, better returns on their retirement. I have husbands and wives who are looking to earn monthly income to pay their bills. Several wives earn enough so that they can contribute to the family and still be able to stay at home. Then I have the younger group, a few younger students, maybe 19, 20 years old, and they're lucky. I wish I was that smart when I was that young. but they're looking to pretty much, they know Social Security and traditional retirement is not going to be around, so they are looking to pretty much retire a millionaire in about 5 years. Most will want to do it in a year, but I'm like, yeah, let's stretch that time frame out to about 5 to 10 years. That's more realistic. But anyway, all of my training is for beginners, and I am heavy on implementation. At least now I am. In the beginning, I might have been, trying to teach you every single thing about options, and I realized, you know what? All of my successful students, if you go to the website, my main website, and you look at the success tab, all those success stories there are from people, and when I interviewed them, they aren't from people who listen to me talk my head off all day long through PowerPoint. The biggest key is they implemented. They got out there and they took action. So now I put a heavy emphasis on implementation because I feel that you learn more by doing than you do just watching me trade. Watching me make money doesn't put money in your bank account, but you actually getting out there and doing it will. And so tonight I'll teach. I may take some occasional breaks to answer questions. And the live call recording, this call will be recorded. The replay of these will come out about 48 hours after the call. And I'll actually give you a link. You'll be sent a link to where the replay of this webinar will be. And lastly, thank you, because time is your most valuable asset. All of my millionaire mentors taught me that the most valuable asset is time, and I never could figure out what they meant, but I finally understand it now. They said time is your most valuable asset. You can't get it back. If we lose money, we can get that back, but I can't get back yesterday. If I wasted the day yesterday, I can't get it back. It's gone forever. I'm watching my kids grow up, and sometimes I wish they were still little tiny babies and they could sleep on my chest. But I can't get that back no matter how bad I want it. They're cool now. They're cool kids now anyway, so I'm not complaining. But sometimes, I'm like, I remember when you were so little, you just cuddle on my chest. I was trading stocks, and we have pictures of my son sleeping on my chest while I'm, trading stocks on my laptop and things like that. But anyway, I'm getting off track here. Time is your most valuable asset. I want to thank you for spending it with me today, because you could be doing a ton of other things, but you're spending it here with me today, allowing me to tithe into your life, my passion of trading. So I do want to thank you so much for allowing me to do that. Now, before we get into the benefit to option trading, I have a quick question for everybody to kind of see where the audience is at, so I know how to tailor my teaching today. And the first question, you will see it pop up on the screen, and it is, have you read the book yet, the Option Trading Made Simple book, and have you implemented the strategy? Take a few moments to type in. You can just click on your computer screen, yes or no. If you've read the book, and have you implemented the strategy, yes or no. And I will give everyone a few minutes. 73% of you have voted. All right, 100% of you, great. So let me go ahead and close this poll and show you the results. This is pretty awesome. All right, so let me share this and see if it shows for you. Okay, it shows for you now. It may not show in the recording. I'm going to forewarn you. Sometimes the polls don't show on the recording. But, so we almost have about a 50-50 split. So 45% of you say yeah, and 55% of you said no. That's actually pretty good. That's usually, I will tell you that usually it's like 90-10 or 70-30, meaning that 90% of the people will say no, or 70% will say no. Usually, well, here you do see more people saying no than yeah, but still, that is pretty good. That's actually really great. So I want to congratulate all of you. You are beating the statistics, because the statistics say that the large majority of people don't succeed in life. They say a large percentage of people don't take action. And here we have a 50-50 split almost, essentially. So congrats on that. Great group here. Now, what I need you to do, for those who have read the book and have implemented the strategy, let me get rid of this poll here. I need one small favor from you. Now, your voice is more powerful than mine. I am biased here about the book, about trading. I've been trading for over a decade now. There's obvious conflict of interest. I'm writing a book on options. I'm telling people, hey, you should learn options. People are naturally skeptical, which is understandable. So I need you to spread the word for me, because my conflict of interest holds people back. People, or if they get skeptical and they don't learn the skill, then I am hindering their success, and I don't want to do that. For those who have implemented, what are some of your results? Go ahead and type in, what are some of your results, those who have actually implemented the strategy, good or bad. It doesn't matter. Just type in at the bottom of your screen what some of your results are, good or bad, like percent returns, maybe how much you made. I won't, put all your business out there, but I'll at least read the results. Because what I want you to do is, I need you all, if you're willing to let people know that this stuff really does work, even the pitfalls. If you don't have a copy of the book, if you have a copy of the book, what I would like is for you to leave some feedback on Amazon about the quality of the content as well as your trade results. Again, good or bad, I'm not, you won't hurt my feelings if you say anything bad about it. Just, be polite about it. But, good or bad, that helps me tweak, fine tune, and know how I can do better. All right. So Anthony says, isn't the strategy for the long term? Yeah, it's for the long term. So just even the last few weeks, if you implement it, to see how some of the results. Okay, so I think it's Suzette. If I mispronounce your name, just let me know. Saw a 623 profit on one stock in 3 days. It is amazing, Suzette. It is truly amazing. Again, I've been doing this for over a decade. I still get giddy about it. I'm still pinching myself, and that's why I said I'm super excited about it. I believe all good things are meant to be shared, and so I want to teach people this. But when I'm telling people that, if me, a trainer, and someone who has courses online that you can buy, and I'm like, hey, you can make $623 in 3 days, they're like, scam radar goes off, and again, they think I have some hidden agenda. I'm like, no, you really can do this. It's just that powerful. So thank you, Suzette, for doing that. So anyway, going back to what I was saying, the people who have read the book, I'm going to ask a small favor of you, and I'm going to ask, again, I'm going to launch another poll real quick, and then we'll get started. So for those who have, taken action, read a copy of the book, would you agree to, in exchange for me taking the time here to walk you through the strategy live, do you have your word that you're going to leave feedback on the book, good or bad? I really, of course I do care, but I do want the feedback so I know how to improve it and how to make it better. So in exchange for that, do I have your word that you will do that? Leave me some feedback, preferably on Amazon here, because again, I need you all to spread the word and let people know that this stuff really does work. Of course, it has some pitfalls, which I'll guide you around some of those pitfalls. Okay, so about 58% of you have voted. 75% of you. All right, I will close the poll here in 3, 2, 1. Closing the poll. So I didn't get quite 100% of you, but that's good enough. The 90% yes. So again, I thank you so much. And again, this does really help me learn how I can tweak and improve and make things better. And it also helps spread the word. We're giving back to society so other people can experience income freedom also. All right, so let me hide this poll. Let's go ahead and move forward with tonight's content. Real quick, I'm going to cover some brief benefits of options trading, go over some basics, and then we'll start looking for trades here. So some of the benefits, if you are not aware, Suzette typed in a comment here saying that after reading the book, she understands options. Again, I assume I've made the mistake of getting it wrong, but if I'm wrong, let me know. But saying that she's read the book, she understands options enough to practice, but what she'd really like to know more about is how do I pick stocks to trade with? Is there criteria that could help us pick stocks besides if it's going up or down? And there are 100 to look through. Yes, it is 100 to look through. And I was not going to cover that tonight, but since you've been so gracious to share your feedback and things like that, I'll see if we can slip that in towards the end. Now, Suzette's probably experienced some of these benefits, and everyone else too. I'm not trying to pick on Suzette or things like that, but she's the only one that posted some of her results here that she's had. So benefits. So if you're not aware, these are bona fide, 100% factual benefits of option trading, and which is really why people want to learn this. Again, the $623 Suzette made in 3 days, it's enough money, is really why people want to learn it. But there are other people who understand all these benefits, and it's not just about money. But anyway, stock options allow you to make money when the stock market is going up, down, or sideways. That's one of the major benefits, and really you can sum that up is the hugest benefit of options. You can always be in the market. There's really no reason for you to lose money, unless you make a lot of mistakes. Most people lose money when the market is going down. Sorry for all the loud noise by train tracks and things like that. But anyway, people are losing money in mutual funds and things like that, and they call their broker, and their broker's like, oh, it'll come back, everybody's losing money. And I'm like, yeah, no, everybody's not losing money, because there are people using options, profiting in down markets and profiting in sideways markets and profiting when stocks go nowhere in price. And I'm not sure if I showed this stock on the last webinar we had, which when you get the replay, you'll see our first webinar we had. But this is a U.S. oil stock, USO, and this stock here, I have these lines here, pretty much went nowhere for 5 years. And so buy and hold investors will be frustrated because especially here from 2008 to about 2009, it crashed in price. So let's imagine you was holding that. It was going up, it crashed in price. Well, you're waiting for it to recover. And then after it crashed in price, it went nowhere for 5 years. So that's like frustration on top of frustration. However, there are option strategies I use in the Success Academy where I let people peek over my shoulder. And that year, in 1 year alone, we made about 17% off of this stock that went absolutely nowhere in price. And we use selling strategies. They're called a combination of strategies called cash secure puts and covered calls. Okay. Now, you also can benefit from a rise and fall in the stock without actually owning the stock. They're called non-directional strategies. Also, I think this pretty much, sorry, I was pretty much talking about this next bullet point here. You can position yourself for a big move in price. Now, benefiting from a rise and fall in the stock without actually owning the stock is still a non-directional strategy, but mainly, let's see, this is called deep in the money. The second bullet point is called deep in the money trading, and this is sometimes what stock traders will do. Okay, let me pull up Apple Computer. So if you were to buy Apple Computer right now, it's $122 a share. Okay, if you bought 100 shares, it's $12,000. What some traders will do, option traders, stock traders, they don't want to tie up $12,000, but they still want to, again, benefit from the rise and fall in stock price without actually owning the stock. So they employ something called a synthetic strategy. It sounds complicated, but all it means is you buy an option, and you buy options, they call them deep in the money, and you buy options that are so far in the money that they pretty much move dollar for dollar worth of stock. So it's simulating owning the stock, but you don't actually own it. But instead of laying the 12 grand, it might cost you $2,000. And so it's a really, really cheap way to trade stocks without actually having to buy the stock. Last, I think second to last bullet point is you can earn extra income off your current stock holdings. This is one of my favorite ones. It's like owning a vacation home. If you own a second home or vacation home, you're only in it a few months, weeks out the year. Now, so when you're not in it, you have a choice. You can let it sit empty, or you can rent it out while you're gone. Well, this strategy is called covered call trading, and it's, some people own stocks from your company you maybe work for. You've inherited stocks. You can let it sit there. It's like a vacation home. You don't plan on selling it. You want it. You want to benefit from it eventually. But while you're owning it, you can earn extra income off of it, and it's something called covered call trading, which we're not going to cover tonight, but I just want to give you the terms, some of the benefits, so you know what that's about. And this is a strategy that Warren Buffett, the world's richest investor, is known for. And this is buying stocks at a lower price than everyone else. You pretty much get paid to buy stocks you want to own. It is, again, one of the old income strategies are one of my favorite ones, getting paid to buy stocks we want to own, and that is called cash secured put trading. And the last benefit is you can guarantee you won't lose money if your stock declines in price, or at least limit your losses to a certain point. So going back to Apple here, if we were to buy Apple at $204 and we came in here, I don't know if you read the book, we went over some basic definitions of calls and puts and went over some examples, so I won't cover that now. But it's something called a protective put. So if we bought it at $204.50, we can come in here And these, I don't know what's going on with this platform right now. It's not showing any prices. So I'm not quite sure why. I don't know if the webinar software is messing with it. So let's come back to good old Yahoo then, since Yahoo is the website we profiled. Oh, now the prices want to show. Oh my gosh, I don't know what's going on here, but I apologize for that. But anyway, all right, let's just stick here. We could come here at 205. We buy a protective put at 205. It costs us some money like any kind of insurance does, but it essentially protects us, meaning that we can't lose any money. We bought the stock at 205.50. This contract gives us the right to sell it at 205. So we actually will make money if we had to sell our stock. If Apple went to zero, you could sell your stock for 205, even though the stock went to zero. Let's say 50 cents. If the stock crashed in price at 50 cents, which is not likely, but if it did, you'd own this contract and you could sell your stock for 205. Okay? Let me go ahead and move on. Those technical difficulties is slowing me up here. Now, real quick, I'll spend less than a minute here. For those who don't know me, don't know my story, don't know how I discovered all this. Essentially, I grew up, I guess, American poor, not third world country poor. Here's a picture of me and my boys here. And I grew up in a small town in the state of Virginia. And we lived in a house with no running water or bathroom. When I was in the military, my buddies, they thought I was joking. They couldn't believe that in this day and age, there are people who still don't have running water in their house. I'm like, well, yeah, that's all I knew. And we had something called an outhouse. That's the picture to the right, bottom right. And during the day, we had a 5-gallon paint bucket. Me and my son was talking about that earlier. I think yesterday, he was using the bathroom. And I was like, you got to appreciate all the luxuries, because I didn't even have something like a toilet growing up. We had a bucket, literally, that we used. So I grew up, I guess, probably with a poverty mindset. And I was, skeptical of all rich people. I was told that rich people were bad. However, I was working individual, got tired of working, searching the web one night, how to make money. I don't know what I searched in, but I discovered some website. Long story short, I met a group of what I call enlightened millionaires, and they were at the tail end of their wealth, and they were ready to give back and kind of teach people how they create their wealth. So they took me under their wing, and they taught me the secrets to how they built their fortunes. They taught me a lot of different things. Real estate investing. It taught me, even though I didn't use all this stuff, they taught like how to write books. They taught how to create websites. They taught stock trading, option trading. But I kind of, I guess, started out in real estate, went broke, and then I went and jumped to option trading, and I've been here ever since because I just absolutely love it. There's no better return on investment I get in any other type of investing I do compared to options. Options is it. So anyway, these millionaires taught me all their secrets, and then they asked me to give back once I created wealth. So again, one of the things I learned was option trading. But, and here's a big, I guess, myth. I've been realizing people think that options trading is my only source of income. Like, I trade for a living, that's my only source of income. And I'm like, heck no. My mentors didn't teach me that. They taught me something called multiple streams of income. They told me that relying purely on real estate investing or relying on option trading is not smart. It's like relying on your job is your only source of income, and then you get laid off and you realize how flawed that plan is. So they always taught me to have at least 5 to 10 income streams coming in at any given time. So when one income stream is down, like last year I didn't make a lot of money in the stock market, well, but then our rental properties, will bring in steady income. So they always taught us to have multiple streams of income, so that way, we have no single point of failure to really hurt us. It's just that options is my favorite. Options is the one I make the most off of percent-wise. So that's why you really hear about that. But I want to let everybody know, I am a full supporter of having multiple streams of income. And your job, your corporate job, is one of those sources of income. I'm not against jobs at all. Now, the formula they taught me is what we call the option profit formula. They call it the freedom formula. It's just essentially taking your income and buying or accumulating assets to create monthly income. Real wealth is monthly income. They didn't teach me to have a $1 million or $2 million portfolio, because that does me no good. What they taught me to do is create monthly income. Always invest for monthly income. So that way I didn't have to wait 30, 40 years to retire for that income. I built that income like today. So that's what they taught me to do, and we call it the option profit formula. All right, so any questions before we move on? We have about 5 minutes before we start looking for trades. Any questions before we move on? Go ahead and type them in if you have any questions. So no questions. All right, great. Let's go ahead and move on to option basics. There are two parallel camps to trading options. You can be an options buyer or an options seller. Option selling is selling something you don't own. The short analogy I can use is think of insurance companies. If you own a home or you have a car, you have car insurance, you pay them a monthly premiums each month. In exchange for that, they agree to pay off your car if you wreck it, your house burns down. They agree to build you a new house or give you the money for it. Okay. Most of us don't really like paying for insurance until something happens, and we're glad we have it. So as an option seller, you're essentially doing what insurance companies do. All right. You are agreeing to take on some level of risk, and people will pay you monthly premiums for you in exchange for taking on that risk. And like all insurance companies, I've been paying car insurance for, gosh, I don't know, how long have I been driving? I don't know, 10, 20 years, right? I've bought homes. My first home, I think, I can't remember when I bought my first home. I've had homes for, again, 12, 15 years. Never once house burned down, haven't wrecked a car in years. But I've still been paying those premiums. So when you become an option seller, the probabilities are really on your side that you will never have to, I guess, come up with all that money like an insurance company would. So you literally collect premiums each and every month, each and every week, however you want to do the strategy. That's option selling. I don't really talk about that in a book because it would take a book in of itself. But then we have something called option buying, which is taught in the book, something you're used to. It's buy low, sell high. We're buying an asset. When it goes up in value, we sell it for a higher price, okay? So the examples I gave in the last webinar is, some people buy baseball cards and in hopes that they go up in value, or they buy like oceanfront or waterfront property because they know that, God's not building any more land. That land goes up in value eventually, so that's what they do. So those are the two examples we gave. So I'm going to give you another example here using the trade I made here in the book. And I have it here. I see your question there, Dave and Anthony. Give me one sec. So the example here I have in the book is, well, the trade I made in the book here is a call option trade. But let's look here towards the bottom, checkpoint 3, and we'll update this checkpoint. The last time I updated it was on February 28th. So on February 28th, we can see that my option trade was up 17%, but the stock was up only 2%. And that's because, again, as taught in the book, options have a leveraged aspect. It would cost 20 grand, to buy 100 shares of SPY. But again, going back to what I said before, you can benefit from a movement in the stock without actually owning it. This is not a deep in the money call, but it's just a simple option trade, which represents 100 shares of stock. But instead of investing 20 grand, I invest $1,000 or $1,200. So that trade was up 17%. Okay. Now, these are not, dollar amounts are not the same, but you can see clearly just by price movement in the same days of entering and exiting, same days and updating, how the option was up, 17% and the stock was only up 2%. Okay, let's imagine for a second I bought, let's do 15 contracts. So let's imagine I bought 15 contracts here. Let's bump this up to 16 contracts. And we can see I invested 20 grand for the stock, 19 grand. Let's say I was willing to risk the same amount of money, close to 20 grand on the option. And I don't have the formulas. Let me change these formulas real quick so you can see profit-wise. Okay, so now you can see that dollar for dollar. Now this is a dollar for dollar comparison. Dollar for dollar, if I was to buy the stock, risking roughly a little bit less actually dollar-wise, I would make $3,600 versus $500. Okay, so that's why people are investing in options. But my warning to you is that risk, that usually gets people greed gland. People salivate and they start dreaming of taking mortgages out and getting loans, invest. That works in the negative too, and that's what really gets people is the negative. They get caught up in the pitfalls and they give up. And I'm going to teach you a secret tonight as how to not let that happen. Okay, so let's see. Anthony asked a question, is there a way to tweak this for monthly income rather than long-term income? No, Anthony, not the way I taught it in the book. I'm sure there is a way. I don't teach it for monthly income. I'm teaching it for long-term baby steps. Because again, all of my stuff is for beginners, and I want people to start somewhere small. When you get into the whole tweaking and monthly income, it's going to take more management. It's going to take more skill. That's not something I really could teach in that simple book. Again, you don't have to learn from me. I will say that. I don't care who people learn from. I don't ever care if you ever enroll in my course. I just want you to learn this. If you find another trainer that you resonate better with, he has a program where he can mentor you, by all means, go sign up. I will be more than happy for you, because I know that you're on the path to wealth creation. So my long-winded answer to that is no, I don't have a way. There probably is a way, but on the fly right now, I can't come up with one. Maybe in a later book, I might could show people how to tweak it, but I have to test it out myself first. I only teach what I know that works, and so the strategy in the book is something I use. Okay, Dave says, how do you recover in trading after a high loss? Great question. And he says, I don't know which one is better, if options or day trading. What do you prefer? I see people like Timothy Sykes making returns on money with a little money, and then pretty much making large sums of money with a little bit of money. And then they make so much money, make so much more than option trading. What do you prefer for consistent income with little money to trade? Excuse me, that's two questions. That was Dwayne's question. Sorry, Dave. I jumped your question with Dwayne's. Okay, Dave asked a question. So let's take a break here. I'll take a pause here because the next point, what I'm going to do is just update you on the live trade, my results. We're going to do a live update, and then we're going to look for trades together. So we will do that, and then we'll have open Q&A. So I'll take a break here to answer some questions. Dave says, how do you recover in trading after a high loss? That's a tough one. Well, it's a great question, but let me first answer it how I recover from a high loss. I don't recover from a high loss because I never put myself in a position for a high loss. So that is my sneaky way on how to recover from a high loss. I never put again, I will repeat, I never put myself in a position to encounter a high loss. That's what I do starting off. In the beginning, did I have a high loss? Yes, because I didn't know some of the money management secrets and things like that. And all I would do is just take time off. I take a break. Sometimes I took a 6-month break. It took me a long time. And on my website, you hear me say it took 3 years for me to really succeed. And it's because I had a lot of false starts and breaks and things like that. Sometimes I took 6 months, off. And, I'd want to give up thinking that, oh, it's too good to be true. But I knew that people were succeeding with this. I had a young kid, 18 years old, take the same class I did. I talked to him a year later. He had made so much money. He had bought a duplex rental property. He was making like $5,000 a month trading options plus his real estate income. And I was wallowing in self-pity, still with my poverty mindset. And I'm like, this kid took the same class I did, but we have different results. So I had those kind of reminders in my face all the time that this stuff works. I just need to figure out what I'm doing wrong or what I'm doing that he's not doing. So I kept at it, just kept being persistent. Giving up, you'd never hear most people say giving up is okay. And I'm like, giving up is okay, honestly, as long as you get back up and try again. So that's all I would do is just take a break until I recover emotionally, until the loss didn't feel as bad. I wasn't as depressed. I went bankrupt in real estate. I took maybe a year and a half off. I didn't invest in anything. I literally stayed depressed and cried and was ready to give up on investing altogether. And then eventually I see more, again, real life examples of people making it as investing. And I just got back, what they say, get back on the horse and try again. That's all I did. It's however long it takes you, 10 years, 20 years, just keep going again. Sorry, I didn't mean to spend so much time on that, but I hope that at least helps you out a little bit. Now, before I leave this topic, I will say what you shouldn't do. The one thing you should not do to recover from a trading loss or massive investment loss, whether it's mutual funds or stock, is you should not, I repeat, you should not learn to trade options to try to make up for what you lost. That is a recipe for failure. It is one of the hugest reasons why people fail. is because you're doing something based on emotions. And one of the questions I was going to ask you later tonight is, have you ever made an emotional decision? And has that, have you found that making emotional decisions have helped you out in life? No, probably not. So one of the things you should not do to recover from a huge loss is try to trade your way back. It's a recipe for disaster, because all you're doing is you're creating more muscle memory in your brain. If you study your brain and things like that about your loss, and you're focused on your loss, and it makes you more emotional when things don't turn out the way you want, and it just gets uglier and uglier and uglier. Okay, so just remember that. All right, Dwayne, let's see. Dwayne was just saying about Timothy Sykes and trading and options. I don't day trade. I used to day trade. I was successful as a day trader, but oddly enough, I didn't like it. It didn't fit my style. I'm a lifestyle trader. All right, so let me come here and show you an example here. I'm a lifestyle trader, meaning I come in here, I place trades, and I do not want to sit in front of my computer every single day managing them. I like set it and forget it styles, or lifestyle. I like freedom. So I will take a lower profit amount for more freedom. Because remember what I said in the beginning of the call, my mentors really ingrained in me that time is your most valuable asset. So everything I'm doing is always, which is why they would hire people to cut their grass and things like that. They were freeing up their time. So this long-term strategy that I taught you all here in this book is based on one of the strategies I teach. Is an income, a style. Okay, here in this trade you see on the last update, this is not as profitable now, which we'll update here in a second. It took me literally 10 minutes to place this trade, and here I am making almost 20% on my money in a month. And I have all this free time I can spend with my family. I can look for rental properties. I can do other things with my life. So I'm a lifestyle trader. So that's why I don't like day trading. So my preferred style is to trade options in such a way that it frees up the maximum amount of time. I'm not here to make the most amount of money. I'm here to free up the maximum amount of time. So that is my style, and that's what I teach. All right. Let's see. And Dave just added something else to his other comment. Or we have a series of down days when you're long call options. Okay, that's another point to that question, Dave, about what do we do to recover from a huge loss? Or what if it's not a huge loss? What if it's just a series of down days? It's still the same. I will take a break there. Sometimes you might just have to cash out, go to all cash, and wait till the market is trending better. Right now, if you're experiencing losses now, it's normal. I was experiencing losses because the market is having a moment here where it's pulling back in price. Let's pull up I have a 10-year chart still pulled up. Let me pull up a 9-month chart here. We can see that, let's get rid of these lines. We can see that the S&P 500 here, which is the ETF of the 500, pretty much is tracking the S&P 500, 500 of the largest companies in the U.S. We can see here towards the right here that it's pulling back in price, falling in price. So if you've been experiencing some losses lately, that's why. What people don't know is, a lot of newer traders don't know, is 75 to 80% of all stocks will follow the direction of the general market. So, people don't know that. They don't realize how important the general market is and how much influence it has over your stock or mutual fund positions. So even I experienced, actually I exited a trade with a profit, but it ate up like majority of my loss. I went from I think a $300 profit to like a $40 profit. So it ate up the majority of my money. But right now, yeah, if you're experiencing some losses, this is why. So you can either just take a break and wait for the market to start trending better or things like that. All right, let me go ahead and move on so I can update you, and then I'll circle back here, Wanda, with your comment. Well, let me go ahead and answer it right quick. It's a quick answer. Wanda asked, do I only teach long term and how to earn extra monthly income? No. Sorry, Wanda. Yeah, I can see how it confused you. No, I don't just teach long term. I said the way I trade is mainly for long term. My students know I teach them income strategies. I teach them how to be short-term traders, and they also peek over my shoulder and they can see my long-term strategies, how I trade. In the beginning, I used to be a shorter-term trader. I had more time. I wasn't married to kids. I could be at my computer all day. So I teach them those. I'm like, if you want to do that, great. But the older I get, the more I realize, I don't like being at my computer all the time. So now I'm mostly a long-term trader. I sprinkle in some shorter-term trades, things like that. and definitely I do the monthly income strategies. Those are the selling strategies, usually what people earn for monthly income. So yeah, definitely, hands down, I do those all the time. But I was speaking more in terms of buying options, like buying calls or puts. All right, so let me update you real quick on this trade because it was up 17%. And in full disclosure, if you're not used to my teaching style, I don't hide anything up under the carpet. I always get annoyed. I think I do it because I get annoyed. Even now today, the market is crashing in price, and I'm on a lot of email lists. And so I'm getting all these people emailing about, oh, here's this strategy. Here are all the winning trades. And I'm like, they only show winning trades. And I'm like, that is so not realistic and not accurate. It's not even funny. And it sets people up for failure because you join thinking that you're always going to make money, and you don't. The market doesn't work that way. So sorry to disappoint you. That's not life. That's fantasy world. There's no Jack and the Beanstalk. There's no Santa Claus. It doesn't work that way. And so not a lot of people are not willing to say that. But anyway, don't get me started on that rant. 204.50. So that's where the stock is at right now. So I bought the stock at 204.97 on 1/23/2015. So you can see I am down about $52 in the stock, or negative 0.25%. So that's the stock. Now let's look at the option, how much I'm down on the option. The option, I can tell you right now, is going to be down probably at least 10 times that amount. So I bought a January 16 205 call option. Let's see what the price is. If I was this leads to one of the questions somebody asked me about bid and ask spread. They said that their ask price was bigger than the bid price, and it's always supposed to be like that. The ask price is always supposed to be like the bid price, but I'll cover that here towards the end. So anyway, if I was to exit this trade here, I would have to sell at the bid price. You usually buy at the ask, you sell at the bid. It's like an auction. People are bidding and you're asking, people are asking for a certain price. You bid for the car, things like that, what you're willing to pay for it and all that. So it's just tussle, just give and take, right? So you buy at the ask because that's where people are asking. And like, I'm asking $2,000 for this car. Okay, I'll buy it at $2,000. So that's the ask price. You sell at the bid. All right, you're like, well, this is what I'm willing to pay, but until there's a meeting of the minds, nothing gets happened. So, simple summary there is you buy the ask, sell at the bid. Hope I didn't confuse you there. But anyway, 10.58. If I was to sell that today, I'd have to sell it at 10.58. So January 16, 205 call. Let me just make sure I got that correct because I am prone to make mistakes. Yep, I did. Nope, I got that right. 10.68. Okay, so you can see that the option is down 13%. Okay, so this is where people get burned by options, and they wish they were a stock trader at this time. They liked options up here, making 17% versus 2% of the stock. But here you can see how the losses are magnified due to that leveraged ability there of options. So down 13% on my trade. Okay. All right, so now my question for you is, what should I do? Should I exit the trade? Should I stay in it? What do you think I should do? Let me know, and I'll see, and I'll give you, again, what I was talking about. It helped Dave, too. One of the secrets that I figured out how to succeed. Okay, Anthony says stay. Dwayne says exit. Why should I stay, Anthony, and why should I exit, Dwayne? So you both have different answers. Dave says you have plenty of time, probably stay in it. Suzette says stay in. Suzette, you're going to be one of the most successful traders. Before I read your answer, I will tell you you are dead on. You are 100% on the right track. And Anthony says too small of a loss to exit. Okay, thank you all for your participating. Anthony says stay because it's too small of a loss to exit. Dwayne, why should I exit? Did you tell me yet? I'm waiting for your answer. Why should I exit, Dwayne? So Dave is just saying plenty of time. And Mitch is saying stay the course. Okay. Suzette says, looks like Dwayne is not going to put it, so it might be a delayed Dwayne. Okay. Dwayne says I meant to stay. Okay. Sorry. All right. So Suzette said stay in until it approaches a 50% loss. Now, why did she say that? Because what did I say in the book here towards the end? What is my trade plan? Let's see if I can find it here real quick. In the end, I gave you a simple, I told you I'm going to give you a really, really simple trade management technique. And that is to, okay, it says You exit anytime after your trade hits the 50 to 100% gain range, or exit immediately at a 40 to 50% loss, give or take. Okay? I says, I know, I says, in the book I put, I know you will be tempted, but there's no daily management. There's no tinkering. And I put it in bold here on purpose. You only exit after one or two things happen. So Suzette was correct. Now, why did I put that? Because one of the secrets to trading success is called following a trade plan. This is called a trade plan or business plan. You can look at it like a business plan. What it does, and this is, well, and what the trick here is, it could be 30%. The numbers don't matter. The trade plan does. And what it does is prevent you from making emotional decisions. Why I should exit or stay this trade has nothing to do about it's a small loss, has nothing to do about, hey, I have plenty of time, because those are kind of subjective. They could be emotional reasoning. I had a guy who exited his trades the other day, and he was asking me, was his reasoning sound? I'm like, well, I get why, but what you did was exit based on emotion. And in the long run, that you will never succeed. So I went to a marriage counselor a long time ago, and he taught me an example that I applied to trading. And he talked about paramedics, and he said, do you ever wonder how paramedics can go on a scene of an accident, and there could be limbs cut off, there could be blood everywhere, and they are as calm as can be. And he said it's because it allows them to function and do their job, and they practice that. They have a plan that they follow. If they come on a scene screaming and hollering and like, oh my gosh, just like blood everywhere, do you want that kind of person helping you out if you're like, you know, stuck in a car dying and you're bleeding to death? No, you want somebody calm and cool saying, you know what, we're going to help you out, Mr. Wilkerson. Just stay patient, you know, let us get through you, things like that. You want somebody calm. That's what a trade plan does. A trade plan is just a really sneaky way to prevent you from making emotional decisions. So yes, Suzette, that's why I should stay in this trade, because it hasn't triggered my trade plan. I still have time. Okay. So again, that is one of the biggest secrets to trading success, and how people want to know, well, how do I prevent myself from making emotional decisions? That's how. You craft a trade plan on the front end and you follow it no matter what. So people are like, okay, well, what if my trade plan causes me to lose money? And then what do? Okay, fine. If you don't like the end result, then you tweak the trade plan on your next trade. Okay, you tweak and improve. Over the decade I've been doing this, I've tweaked and improved, and I found a range that kind of works, that gives me a lot of leeway. And this is it. This is not the only one, but this is one that I can kind of teach to everybody. So that's what you do. If you don't like the end results, you tweak the trade plan on the next trade. Maybe the next trade you get and you say, okay, I don't want to wait till 50% profit. I already had a 17% profit, and I didn't like watching that go bye-bye. So maybe I'll wait until I hit a 20% profit and cash out. So that's what you do. You keep tweaking until you find an approach that kind of works for you. Make sense? Yes or yes? All right. So I was just already repeated. I was just looking at some questions. Okay. So that's it. So I gave you an update on my trade. I don't, looking at the time here, these are the, and below my trade, on the last call, we found some stocks as a group, CI, Apple, AAL. You know, you can see the first checkpoint here on 228, same day I updated my trade. You can see these stocks were profitable, CI, Apple, and AAL. I will tell you, you can check these, you can look at the replay and check these prices in yourself. They're a little bit off. Apple is, I think, break even or maybe a small loss now. AAL is still losing money, and CI is profitable. So CI, let's see. I'll take the time to update CI because that's the most profitable one. Because that leads me to my next teaching point that I wanted to teach you. Again, a money management secret. So 110, if I was to exit, I'd have to exit at 1575. So it looks like, I know it's down a little bit more. Okay, so it's down a little bit from, make sure I did that right, 110, yep, the bid-and-ask spread is pretty wide. Okay, so it's still up 13%. So what I told those last students, or I said on the next webinar, what I would do is teach them the secret to how they could have known that AAL was going to lose money and maybe these other ones were going to make money. And for those who have read the book, what is the two questions I tell you to ask when you pull up the SPY chart? What are the two questions that I tell you to ask when you're looking at the 1-year chart of SPY? Go ahead and type it in, please. And I'm looking at the chat panel just to make sure I didn't miss any questions here. Okay, Dave says the overall trend. And I haven't forgot about your stock picking secret. What direction is a yearly trend? Trade triangles? No. I didn't talk about Market Club's trade triangles. Okay, so real quick, because we're short on time here. The two questions I asked, you guys and gals are close. It's a two-part question. First part was pull up a 1-year chart of SPY, which I'll do right now. Two-part question. The first question was, is the stock going up? And is it still going up? Okay. Is the stock going up and is it still going up? So, is the stock going up and is it still going up? Is this, well, we already see a 1-year chart, the stock is going up. Okay. Is the stock still going up? Yes or no? That's the second part of the question. Is the stock still going up? Well, you all can clearly see that no, it's not still going up. So if I was to actually do this strategy right now today, I'd hold off and just wait a few days and check back to see if the stock was still going up. So looking at AAL here was one of the stocks that I knew this, but I was going to wait to purposely tell people this. Okay, so AAL here. Okay, looking at the 1-year chart of AAL on the live call, I kind of briefly touched on this huge drop in price the stock had. So one of the things I teach in all my training programs is listen to the story the stock is telling you. Okay. I told you the two-part question, is the stock going up and is it still going up? You can see here, this little green circle here on this chart was when we enter AAL. Okay, and if I change this to a line chart, sometimes it helps you see it a little bit better. Okay, looking at a line chart, see when we entered, you can see the stock was heading lower. And this is what I call listening to the story the stock is telling you. The stock was telling us it wasn't a healthy stock. Okay, that's a big secret to those questions I tell you to ask. It's just a shortcut way without getting into advanced techniques or learning stock price movement and all that other stuff, is you listen to the story the stock is telling you. The time we entered the trade, the stock was already headed down. So if we were listening to the story that stock was telling us, we would have listened and heard it say, hey, I'm not healthy right now price-wise, maybe you should hold off. So that is one of the bigger secrets to what we can do before we enter a trade, is listen to what it's telling us. Forget our head about, oh, I can get it cheaper and it might come back because, oh, it has a good product. Forget all of that. Look at what it's actually doing and getting in alignment with it. CI, it was going up. When we entered it, still going up. So we entered about this day. Wasn't falling in price or anything. Nice chart. Apple was too, but Apple fell in price right after we entered it. Okay, that we couldn't have predicted. We did everything right here. We got in a good stock. We just happened to get in right near the top where it pulled back. All right, so that leads to one of the other money management secrets. Okay, for the first one was a trade plan. The second one here is keeping your trade or investment sizes around the same dollar amount. Here's why. Looking at CI, Apple, we invested roughly $1,300 on CI, $1,300 on Apple, about $900. So the AAL, luckily for us, was a little bit less. But when you enter these three stocks here, you can't predict the future. You don't know which one is going to do great, which one wasn't. If any, honestly, I would have predicted Apple would have been the most profitable one. But again, that's my emotions. That's my head. But if I get out of my head and follow trade plans and systems, well, things usually work out. And here it is, to my surprise, CI wound up being the most profitable one for us. So we made 13% on CI, which is $190. We lost at this checkpoint here. At this point when I checked this, we lost 8% on AAL, which is $79. So I was making 190, lost 79. Okay, so I'm still profitable. The challenge I used to have in the beginning is I would make 13% on 1,300, but then lose 8% on like $6,000. So people will look at my percentages and like, oh, you made 13, you lost 8, you should still be up percent-wise. I'm like, no, it was 13% on 1,300 and 8% on like $6,000 because I was buying like Google stock and things like that. So it took me a long time to kind of figure that secret out, like, oh my gosh, this is how I can do it, and how we can't predict the stock market. A lot of it is random and probabilities. When we enter all these trades we want to do, we don't know which one is going to be profitable, which one won't. So we kind of level the playing field and try to keep our dollar sizes around the same. Now, I know I said that pretty quick. Don't let it go on one end out the other. I'm telling you right now, you could talk to any of my successful students, and they will tell you that was one of the biggest breakthroughs for them when they discovered that secret. Okay, so real quick, we have some open Q&A. If you have stocks, and we'll look for stocks together too. Let me look at my notes here. I have one thing on the books. I have to show someone how I pick stocks. It'll be really brief, but I will tell you that. Excuse me. And let me just look at my notes. Let me pause it real quick, take a sip of water, and look at my lesson notes and make sure I've covered everything. And then we'll cover this comment somebody left me here because it's really important. I want to go over this. Okay, so it looks like I covered everything we needed to cover except look for trades here. So someone, while you type in, if you have any stocks you were looking to make a trade on, you want to look at to see if we can make an option trade, go ahead and type it in. Give me the symbol if you know it. I don't know. I'm not like Jim Cramer. I don't have all the symbols memorized. So if you have the symbol of the stock you're looking at, go ahead and type it in. While I read this comment, somebody typed in. They said they read my book through Amazon, but I lost them here at the end of the book using the formulas because their ask price, the entry price, was higher than the bid price. And again, what I said earlier, it's supposed to be. Your ask price is supposed to be higher than the bid price. So that is correct. You're good there. So the figures didn't come out as even as yours. Your figures are not supposed to come out like mine, depending on when you actually read the book and when you implement it. So I want everybody to implement it in real time based on when they read the book, not following my example. So follow the steps and then you implement it. So if you try to, I guess, get my same pricing, yeah, it may throw you off. So just implement it in real time. And then it says the book ended leading to additional websites with more videos. And what this person is talking about is version 2. I teach 2 versions of a 10-minute strategy. 10-minute strategy version 2, yes. Well, this is a wrong link. This is a 10-minute strategy version 2 is on the website. No email opt-in. There's nothing. It's literally just there for you to free just because I wanted to shorten the book down. So you can go there and read about 10-minute version 2. Let's see. So I'm hesitant. Oh, and here's a point I wanted to touch on. And we get emails like this every now and then. So this person says, I'm hesitant to step all the way into your academy mentorship for fear of investing the funds into your course, and the information is too vague for me to follow and learn. I'm so confused, but I know I can learn this slowly and profit a little bit at a time. At this point in my life, learning how to trade stock options is my only option. It is very interesting. I know I can do this. Thank this person. We're very thankful when people get this and let us know how they're feeling. And what I want to do is encourage you and let you know that, yes, if you all have any fear of enrolling in the course, don't enroll. We only want people to enroll who absolutely know beyond a shadow of a doubt it's for them. The program has a high success rate. We want to keep it that way. And we always tell people, don't enroll if you don't think it's for you, if you have any hesitancy, because what it will do is hinder your ability to succeed, because you won't be free of mind. You won't be fully focused on implementing and things like that. You will be looking over your shoulder at the exit door. And so it hinders your ability to focus on the training and succeed. So we always tell people, either the stock market is not going anywhere, we're not going anywhere. Take your time. If you don't get a jive for us, if you can't, really, like, yeah, I like Travis, but there's something about him I'm just not ready to enroll in his course. I'm cool with that. Go find somebody you resonate with and join their course, because I don't care who you learn from. I just want you to get under some mentorship as quick as possible so you can start benefiting and making these type of returns. So definitely, thank you all for that feedback when you get things like that. But if I'm not the person, then find somebody who is for you and enroll in that course. And the last part about being confused and things like that, what we teach people in the training, it's kind of tedious, but you can apply it to the book. Just don't read the book one time. There's no way in the world you can read this one time and understand it. Perfect example is when I asked you all what were the 2 questions. No one got it right. You were close, but no one got it right. I had the 2 questions committed to memory. one, I teach it. Two, I have all this stuff in my brain swarming around. But those students read the book, some of them implemented and they're achieving results, but even them, they didn't even remember the two questions. So the confusion is normal here. And it's because you have to keep reading and learning it until you can teach it live, right? Until you can teach it from memory. That's when you truly find success. So even if you did enroll in my program, you will probably get annoyed because you will hear me say, look, go over these videos at least 2 to 3 times. We teach mastery. We want to get to the point where people understand this, okay? The bid and ask spread, I talk about that, to the difference between the bid and ask spread and why the bid is lower than the ask and things like that. That's also in the book. So if you missed that, go over the book again and you will see it again. When you read the book the second or third time, you will start seeing things that you didn't see the first time around. So that's my tip there as far as, if you're vague or kind of confused. I want you all to do that. That's with anything, a book, training, anything like that. You have to keep going over it because I promise you, you will, see stuff and discover stuff that you didn't see the first time around. All right, so let's see here. See if any of you all put in any stocks here. No, BIDU. So before we look at stocks, before I forget my secret stock picking formula. All right, I think it was Suzette asked me. If not, I can't remember who asked me now because it's way up the chat screen. But how do I pick stocks? There are primarily 2 ways. One, my preferred method, and another is a backup method. My backup method is Market Club. It's a trading software I use. Get it if you want. I'm not, I use it, so I share it. It's made me a lot of money, so I share it with other people. No one's ever complained about me helping them make money. Does have an additional cost, and that's a hold up for a lot of people. But also, you can even see some of their comments on the blog. So people usually make their money back on 1 or 2 trades. But they have something called, you can click here, trade triangles. And what they do is they have you can sort through, all the stocks in the market. Well, all the stocks, at least in their database. I don't know if they have every stock in the stock market in their database, but they have several. So you can look equities, you can search for index, mutual funds, ETFs. So if I'm searching for stocks, I usually like high volume stocks that mutual fund managers buy. Because what I'm doing is finding stocks that mutual fund managers will buy. If you don't know, it takes about 3 to 6 months for a mutual fund to fully enter a stock position. When they're buying, they usually push the price up. So what I'm trying to do is get in while they're pushing the price up or down and then profit from that. So I look for stocks volume greater than 100. You can look at weekly, daily, trade triangles, things like that. Just for this quick example, let's just do monthly, search back 3 days. When I scan, what I do is sort the stocks by score. And that tells me all the stocks with volume greater than 1 million that had these long-term entry signals, and I'm looking for strong trending stocks. I'm biased. I listen to the story the stocks are telling me. I look for strong trending stocks. That's my backup method, okay? My primary go-to method is something called Investors Business Daily, and their website is investors.com. Again, an additional cost, but I treat trading like a business. In the beginning, I was broke and poor. I couldn't afford all these tools. So what I did was go to a local library, find the Investors Business Daily newspaper, and I look at it for free, and I pick stocks out of it. Investors Business Daily, what they do is they have a proprietary ranking system, and they look for stocks. They look at all the fundamentals of stocks, and then they rank them, the top 10 to 20% versus the bottom 10 to 20%. And so I go through their ranking system and I pick out the top 10 to 20% based on their ranking system. And then you pick up the paper, you'll see their ranking system. They'll actually teach you the ranking system, and what you use. So that's what I do. There's also something called, let's see, I don't see if it'll be here. There's stocks on the move. They show you stocks that are making huge price moves, high volume. Sometimes I'll look for these for like a shorter term play. I don't see it here on the home menu, but it's something called the IBD 50, and that is the top 50 stocks of all the stocks that are in the stock market. So some of my students use that as a shortcut, and that's a shortcut I showed them. Forget going through the paper, looking at all these numbers. Just tick IBD 50 is already the top 50 stocks that are trending in the market based on fundamentals like earnings per share, sales, profit margin, all these fundamental things that mutual fund analysts look at. and IBD does all of it for you. So it's well worth the cost in my opinion. But again, if you're not there yet, I always say you can find a free paper somewhere, at least in the U.S. I don't know about the international students and where you can find those free newspapers at. So those are my two ways. That's just a short answer. I pick IBD 50 as my preferred method because it's not unusual for the IBD 50 stocks or the stocks I find from the Investors Business Daily. It is not unusual to see those double and triple in price in a year. So when they double and triple in price, you can see here how going up here how, again, earlier I was making 17% on the option and 2% on the stock. So imagine a stock that doubles in price. You can imagine how much money I'm making on it by trading options on it. So that's what I do. Those are my ways I trade stocks. And I'm looking at the time. We are way over. So if you have to leave, hey, I understand. I'm going to keep going here for another 5 or 10 minutes, and then I'll stop because I don't want to make the recording too long here. But I'm having fun. I don't know if you are, but I'm having fun. I love this stuff. I could talk about it all day long. So let's look at the stocks real quick. Dave put in BIDU, and I will leave Market Club put up because if none of these stocks satisfy our 2-question test, okay, so I'm not going to do you all like I did last. I set people up for failure last week knowing that AAO was going to be a bad stock. I would have not entered that stock at all, but I just wanted to show people. So if anything, I showed them some of the pitfalls of option trading. I'm not going to do that tonight. So BIDU does not pass our 2-question test. This is a 1-year chart of BIDU. Is it going up and is it still going up? The answer is no. So I am not going to trade it. Dave asked, would I buy a put on BIDU? Nope, I would not. And I'm glad you asked that question, Dave, because that was a point I didn't write down on my notes that I was going to teach you all. Okay, this is a, now I need to pull up the S&P 500. Let's look up a 5-year chart of the S&P 500. Let's go to option basics. Option basics, you make money with a call option. You buy a call option, you make money when the stock goes up. You buy a put option, you make money when the stock goes down. Okay, remember what I said earlier about 70 to 85% of all stocks are influenced by the general market? I have the S&P 500 pulled up right now, which we consider the general market, one of the general market. Dow and NASDAQ is the other two. It's going up, which means we make money when we buy calls. So should I buy puts when when the market itself is going up for the last 5 years? Yeah, you can rationalize it and say you can find stocks like BIDU that's going down and buying puts, but heck no. I only trade call options in bull markets. Well, I won't say always because somebody will say, well, Travis, you said always. I generally and usually only buy call options in bull markets. I want to put as many odds in my favor as I can. You only make money when the stock moves. So I want to make sure I have as many things on my favor, on my side as possible. Well, people say, well, what do you trade put options, Travis? Well, I trade put options when you're supposed to, and that is when a stock is falling in price, and that's during our market crashes or bear markets. That is where easily you can double or triple your account value, and I cannot wait. This is kind of twisted mentally. I don't share this publicly a lot because people get depressed when they lose money, but I cannot wait until we have another market crash because I'm going to teach students what we call the bear market blueprint, where I'm going to show them, look, I'm going to walk them through my actual real money account and like, this is how we double or triple our account during these market crashes. And so that's why I'm super excited because I've never been able to do that live. We've done it behind the scenes. We've recorded videos after the fact showing our account statements. But this will be the first time I've been able to do that live with people, so I can't wait. And those are students at the Success Academy, if you're wondering. All right. So, so anyway, BIDU does not pass our 2-question test. I would not trade it. I would not trade put options on it, only because the market is going up right now. That's why I trade with the same. I get in alignment with the market. So no, Dave, I would not. Now, if you want to buy a put on it and test it out, I can't give you financial advice, but paper trade it, practice it if you want, and see how it works out. I just found that it's not worth it for me going against the general market. So so that's why I do that. All right, so let's see. I missed a couple of questions here. Let's see. The overall, what direction is a yearly trend? I think I covered that. SPY puts, NVDA calls. I'm not going to put on SPY. Already, we kind of can see why SPY is going up. NVDA, has it been going up the last year, and is it still going up? It's still going up. Yes, it's gone up the last year, but not much. It stayed flat for the majority of the year. So even though this passed our 2-question test, I don't really like this chart. I'm biased. Again, I am super picky, which is another reason why I think I've been able to have a higher success rate lately is because I've been super picky. I like stocks like this, CI, that are going up, that have not been messing around. If I had my entire net worth invested in a stock, I would be happy. NVDA, if I had my entire net worth in the stock, I'd be a little happy because it's higher than it was a year ago. But for the majority of the year, I'd be frustrated. But to be fair, I will write this down. We won't have time to look up options tonight. So what I'll do is after the call, I'll look up the options. I'll see an email, like a trade alert email. I'll show you which options we can track together as a group. But we're already over the time, so I'm going to skip that part for tonight. Urban Outfitters, somebody else put in a stock here. Also after the call, I'm going to go through both Market Club. I'm going to find at least 1 or 2 stocks with Market Club, and then show you IBD. So that way you can see the stocks you gave me, the stocks IBD. I'm preaching about how great IBD is. You can see the stocks, IBD stocks, how well they do and how well Market Club. So we'll have some comparison there of different stocks found through different methods. Urban Outfitters, same thing as the last thing. Yeah, it's been going up. It's still going up. It's gone up higher than it was a year ago, but pretty much it stayed flat for an entire year. So let's pull up a square real quick. So if I had the question I always tell people is don't get jaded by a certain company because you like their products or things like that. Look at the story the stock is telling you. And if you had your net worth invested in this company the last year, would you be ready to call the CEO and be like, hey, what are you guys doing? I've got my money invested in the stock. It's not going up. It's going like down, sideways, but you pretty much made no headway. I don't like to fool around with stocks like this. It's gone up lately because of earnings, but that's like a one-time event. We don't know if that'll last. But again, I will write it down, and just so maybe we can track it together. JC asked a question about the Success Academy. Are the classes scheduled or self-paced? Right now, all the training is self-paced. I used to teach live, but people would travel, be in the military, they'd miss out. They feel like they're getting behind, and they get defeated emotionally. That's and I can't have that, because if you're defeated emotionally, you won't really succeed. So now the classes are self-paced with Q&A videos. So you ask a question, I'll record a Q&A video live for you, or we'll do bonus live Q&A calls every now and then. They are on hold right now to give students some time to get through what we've already recorded for them, as well as restructure some of the training and make it better. All right, so I can't see your name. It's kind of in small print here. Nitin, I might be butchering it. I do. If I am, I'm apologizing. So it says, so the question is, should a beginner always be buying an option which expires in a year? Can't we buy options which expire in a week or two, or would that be too costly to buy? Great question. As a coach, my answer is, as a beginner, follow what I taught in the book. That's the safest answer. Follow what's taught in the book here. This book right here. Now, if you want to test out buying options that expire in a week or two, go ahead. Go ahead and do it. Test it out. And paper trade it, though. Don't invest your real money. Paper trade it, and then email us the results. I think you'll find that the results are pretty eye-opening, and you will see why I teach people to buy this option with a year out. Buying options with a shorter time frame it's riskier. It's really, really risky. You've got to really have everything going in your favor. And it's a quick way to lose money, really quick way to lose money. All right. Ken, you recommend for us Brits as a sink or swim, think or swim. People say sink or swim. I don't know why it's not available here. Ken, let me write this down. Foreign student. I have a foreign student resource guide that the Success Academy students put together. I have students from all over the country, Iceland, Australia, UK, New Zealand, Thailand, Singapore, US. So they've all put together a resource guide to share with the group, their brokers, pros and cons and things like that. When I post this replay, I'll post that foreign student resource guide. And you can thank those students because it's not me, it's just them. We have an awesome community. I mean, people give back. I have the best group of students ever. I am very, very lucky there. Okay, looking at the time here, 3 more minutes, folks, and I'll let you all go. Dave just says, thanks for sharing your time. You're very welcome. Dwayne says, how do we sell, and do we sell to buy puts? I'm not understanding that question, Dwayne. I'm sorry. Just for time's sakes, I may have to skip that one. You can email me clarification on that. Dave says, what kind of annual price range increase would you consider? Do you ever trade 30 or 60-day options? No. Oh, excuse me. 2 questions. Dave, what kind of annual price range increase would you consider? I'm not sure. It varies, actually, Dave, per the stock. Each stock and option is different. Let me give you all a different screen to look at. Each stock or option is different. I don't have a cookie cutter answer for that. Next question here. Do you ever trade 30-day or 60-day options? No. Maybe 60-day, but definitely not 30-day. I won't have time to go into that, but the short answer is due to the rapid time decay. I don't have time. Excuse me, due to the rapid time decay. It's a quick way to lose money. But don't trust but verify. Something the military taught me. And I don't have no problems with you all doing this. You know, go through the book. Try to prove me wrong. Try to prove me to be a fraud. I don't care. Trust but verify. Don't just take everything I say at face value. Try to find truth for yourself. That's the only way you'll believe that. So if you hear me, I just told someone that trading options with 30 days left to expiration is a recipe for failure. You'll lose money. Trust me, but verify. Go do it yourself so you can see what I'm talking about, okay? So that's what you should do with everybody. Trust but verify. Okay, somebody put in this stock here. Nah, I'm going to definitely pass on this stock. And Ken, no problem for asking that question. I'm glad, Ken, that he asked a question about the UK students. You know, you have no idea how bad I felt that, you know, foreign students would come to me and I couldn't help them. They're like, what do I do here? And I was like, I've honestly never traded outside the U.S. I only know about trading from a U.S. perspective. So I was literally handicapped there. So they did a lot of legwork figuring it out themselves. And I'm so glad that they helped me put together that guide to give the other foreign students, because that's the area I'm lacking in. I just don't know. I haven't been out of the country to trade like that. And last question here. How do you like Facebook? Facebook. This is a 1-year chart. It's if you look at where it's at a year ago, it was at about $70. Is at 77 now. So it took a whole year to go up $7. Let's see, $7 divided by a year ago was at about $70. It took a whole year to go up 10%. That's not bad. 10% in a year. It could do better, you know, for a stock. Seriously, I have high expectations for stocks. They better go up at least 20, 30%. Again, I'm picky though. I'm like, if I'm putting my money to work, I was like, you better work hard. So it's gone up, but for a stock, nah. I mean, look at, for a comparison, let's look at Apple. Okay, Apple was at 77. Now, you know, Apple is in a whole category, all of its own. But even still, with where it's at now, with the minor pullback divided by, what was that, about, let's see, $75 a year ago, it's gone up $47 divided by, you know, it's gone up 60%. That's a stock I want to, you know, fool with. So anyway, I didn't mean to go on that side rant there. And Ken just says, many thanks for your time and sharing your information. You are very welcome, Ken. Thin. I am tired, folks. I need some water. Sorry for my thin Ken. Sorry. It is time for me to go. We have been going too long here. This is it. I will get this replay out to you all 48 hours after this call. Again, I will send you that trader alert email. I will do some research after the call. I will take the stocks everyone gave me, at least a couple we did that, or so. I'll also look for some stocks myself. I'll send you a trade alert. I'll show you what strike prices I'm targeting, which month, what price, all of that. We can track it and follow along together. And I will update this spreadsheet, which will be on the same page that this replay will be on. So that's what you have to look forward to. All right. So everyone, it's late. Yes, right. For some of you UK people, definitely. You take care. Have a great weekend. Again, thank you for spending time with me tonight. All right. Talk to you soon. Bye-bye.